Mortgage rates ticking lower for a third straight week, but still holding near 7%, according to the most recent data from Freddie Mac. This, as new data from Redfin shows 17% of homeowners with mortgages have an interest rate of at least 6%, marking the highest share in nearly a decade. Joining me now, we've got Mike Aubrey, who is the Mike Aubrey Group Executive Vice President. Great to have you here with us, Mike. So how are you looking at mortgage rates right now?
You know, I think that the hangover that came after the rates that we saw during the pandemic in the 2.5% to 3% range that we have been seeing since then has started to evaporate a little bit. I think that buyers are starting to see that these rates aren't going away. And if they want to buy a house, they're probably going to have to succumb to what the market's offering right now.
And so with that in mind, how is that kind of impacting the calculus for new versus existing home, as new home buyers are also trying to figure out, okay, where are they going to get the best deal to perhaps even on the new home side offset some of their mortgage rate exposure?
You know, I think that one of the things that we saw during the pandemic, and certainly with the advent of remote work, is that there were places that got really, really big, like Austin, Houston, New Orleans, Tampa. And I think that those spaces right now, as we are starting to see a compression of remote work, are starting to drop in terms of their pricing. So I think that for people who can live there and want to buy there, I think that they're going to see better deals in terms of price points. So some of the stronger bastions in the United States, like New York, Washington, D.C., San Jose, Boston, they continue to appreciate, and I think they're going to continue to appreciate as we go throughout the year. The reality is that, I think the president has said that he would like to see mortgage rates go down, but I think that it has finally occurred to him that that's not going to happen by trying to put pressure on the Fed and changing the federal funds rate.
Yeah, 3% was what he wanted to get it back down to. That's what he campaigned on. And, as we think about the policies now that are going to have to be taken in front of Congress, puts to paper, are there any policies that would bring home prices down?
Well, and maybe I'm being optimistic here, but I think one of the things that might help bring prices down is if we can get rates down. There has been some discussion about creation of a sovereign wealth fund. Now, what that looks like, I don't know that anybody really knows what that looks like, but say that they created a sovereign wealth fund and they started to purchase things like 10-year treasuries, as an example, which there is a linear connection between where the yield on the 10-year treasury is and where mortgage rates are. The same is true that if they created a sovereign wealth fund and they started to buy, say, mortgage-backed securities out of that sovereign wealth fund, they also could create lower rates, which I think in turn would create a stronger housing market.
It's interesting. Okay, and so as you have home buyers who are trying to even go out this weekend perhaps, and they've got their list, they've checked it twice, they've looked through all the specs, where are you seeing that they're finding perhaps the best averages in mortgage rates too? Because this is an average that we were talking about in the 30 and the 15 year. Where are the hot spots where the averages the mortgage rates might be below average, or even on the other side above average?
Listen, this is sort of a tough to swallow pill, but I think that looking at adjustable rate mortgages is not a bad place to look right now. Again, using an arm not to buy more house than you can afford, but rather to decrease your exposure to rates. I think that there are some good arms out there right now, specifically 7/1 arms that are non-jumbo money, that I think that you can get well below what market value is.
Mike, just lastly, while we have you here, what are your tips for those who are going out and home buying or home shopping this weekend?
So remember, about a third of houses that were bought last year were bought in cash. To that end, if you are not a cash buyer, then don't get pre-underwritten, but rather get pre-underwritten rather than getting pre-qualified. That means go to a lender, get documented, send everything in that you have so you have a better chance to compete with people who are cash. Remember, inventory remains low. Give yourself a good shot. Basically, hire yourself a broker that does a lot of business in the area so you have an opportunity to see houses that are in private placement that aren't yet on MLS. And the last thing that I would tell you is, this is a contact sport. I think that if you see something that you like, don't be tepid in your actions. Go for it.